welcome to the deep dive. Today we're tackling something that might seem familiar, but it's got layers. Silver.
Yeah.
Not just for, fancy forks or necklaces. We're finding out it's actually this quiet, hidden engine powering a lot of our future tech. Did you know it's becoming super critical for the whole green revolution? And the digital age, too.
Yeah, it really is. It's kind of surprising how central it's become.
Okay, let's unpack this then. Our goal today is pretty straightforward. Give you a solid, engaging look at silver's market. We're diving into silver in 2030, demand, supply, and price outlook. And what makes silver so interesting, right, is this dual thing it does. It's a vital industrial metal for high-tech stuff.
Crucial.
And it's still that traditional precious metal people invest in. That makes the whole market, well, complex.
Definitely complex. Two different worlds pulling at it.
Exactly. So we've sifted through a pretty comprehensive report to, cut through the noise. We want to give you a clear picture why demand is surging, the hurdles on the supply side, and what that might mean for the price tag down the road. So maybe let's start with right now. What's the silver scene look like, say, baseline 2025?
Well, the big picture is strain. The market's under real pressure. What's really insightful, I think, is that global demand actually smashed records back in 2022. Hit 1.242 billion ounces.
Wow.
Yeah. It eased off just a little in 2023, but the things driving that demand, they haven't gone away. And this leads to a really critical point. The market's been in deficit for several years now.
Meaning demand is just higher than supply.
Exactly. Consistently higher. And this isn't just, a number on a page. It means we're eating into the silver stockpiles that exist above ground.
Ah, okay.
And that puts this sort of steady upward pressure on prices. It's a fundamental shift. We saw surpluses sometimes back in the early 2000s, but since around 2021, it's been deficit after deficit.
Okay, so that's the current pressure cooker. If we look ahead towards 2030, you said demand isn't just growing, it's transforming.
Yeah, that's the key word, transformation. By 2030, total demand could easily be in the ballpark of 1.3 to 1.5 billion ounces a year.
That's a lot of silver.
It is.
Yeah.
And the really dramatic part is the shift towards industrial uses. That chunk could be nearing, maybe even exceeding 60% of all silver demand by then.
60%. From what, roughly, now?
It's already the biggest chunk, but moving towards a clear majority. It's a structural pivot really driven by these huge global trends like decarbonization and electrification.
Okay, let's dive into that industrial demand then. What's driving it so hard?
Right, so the big drivers, well, first up is solar photovoltaics. PV silver's conductivity is just unmatched, basically essential for solar panels.
How much silver are we talking per panel?
It's around 20 grams, give or take. Doesn't sound like much, right? But you scale that up to gigawatts of solar capacity.
It's up fast.
Incredibly fast. In 2023, PV silver demand jumped, get this, 64% from the year before. Used almost 200 million ounces.
64%, wow.
Yeah, and looking ahead, the International Energy Agency, they're projecting massive solar expansion. By 2030, that could mean PV needing, say, 250 to 270 million ounces of silver per year. And here's a kicker. You know how everyone talks about thrifting, using less silver?
Yeah, finding ways to reduce it.
Well, some of the newest, most efficient solar cell technologies, like TOPICON, they're actually increasing the amount of silver needed per panel in some cases.
Really? So the cutting edge needs more?
In some key designs, yeah. It just makes the supply challenge even sharper, doesn't it?
No kidding. Okay, so solar is huge. What else?
Next up, electric vehicles, EVs, and all the electronics that go with modern transport, a typical battery EV. It uses somewhere between 25 and 50 grams of silver. That's several times more than your standard internal combustion engine car.
Okay, quite a jump.
It is. And with EV production potentially hitting, 45, 50 million units a year by 2030, our base case sees the auto sector needing around 80 million ounces of silver annually just for new EVs.
80 million. That's serious demand.
And some analysts think EV demand might eventually be as big as or even bigger than solar PV demand for silver. So it's absolutely critical for electrifying transport.
So solar and EVs are massive drivers. What about other electronics?
Right. So electronics and electrical applications are still the single biggest industrial use overall. Hundreds of millions of ounces every year.
What's pushing that?
A few things. The 5G rollout needs silver. The Internet of Things, or IoT connecting devices everywhere that could triple silver demand just for IoT uses. And then there's the whole AI revolution. All those high-performance servers, specialized chips, they rely on silver for circuits because it conducts so well.
It's just the best conductor, basically.
Electrically, yes. And that makes it really hard to replace in these high-performance applications even when the price goes up. Substitution is limited. So you add it all up. Industrial silver demand is on track to set new records, maybe hitting close to 0.8 billion ounces. That's 800 million ounces annually by 2030. It's fundamentally tied to the energy transition and digitalization.
Wow, okay. So industrial's clearly the powerhouse here. But silver has its, shiny side too. Jewelry, silverware. Well, what's happening there?
Yeah, good question. They're still significant, definitely. But that demand is, let's say, cooling off compared to the industrial side. Jewelry, for example, took a bit of a hit in 2023, dropped about 13%. A lot of that was price sensitivity, especially in markets like India, where silver prices in local currency were high.
Makes sense. People buy less when it's expensive.
Exactly. Our base forecast sees jewelry demand recovering a bit, maybe to the 220, 250 million ounce range by 2030. But as a share of the total pie, it'll be smaller because industrial is growing so fast.
And silverware.
Even smaller and even more price sensitive. Probably hover around 50, 60 million ounces. But here's an interesting dynamic. If industrial demand really pushes silver's price way up,
Yeah.
that high price could actually dampen demand for jewelry and silverware. It creates this kind of almost automatic balancing effect on the demand side. Unintentional, but it's there.
Huh. Interesting feedback loop.
Yeah.
Okay, what about the third leg? Investment demand. Coins, bars, ETFs.
Investment. That's the wild card, always. Highly volatile. Really driven by investor mood and, the big macro picture, inflation, interest rates, that kind of thing. Physical investment people buying actual coins and bars was incredibly strong from 2020 to 2022. Big surge.
Right, I remember that.
But then it dropped quite a bit in 2023. Various reasons, tax changes in Germany, high prices in India again. Our base case projection for physical investment is maybe 200, 250 million ounces a year by 2030. Still solid, but maybe not those boom levels.
ETFs.
Oh.
Paper silver.
ETFs saw huge inflows back in 2020, over 300 million ounces. But they were pretty flat in 2023. The base case there is kind of neutral, maybe slightly positive flows by 2030. But the thing with investment demand is it can be reflexive, right? Strong buying pushes prices up, which pulls in more buyers.
FOMO kicks in. Fear of missing out.
Exactly. But then higher prices also tempt people who bought lower to sell and take profits. So it adds this extra layer of chop and volatility to the market.
Okay, so demand picture, explosive industrial growth, driven by green tech, with jewelry, silverware taking backseat, and volatile investment demand. That's one side. But you need the actual metal. What about getting it out of the ground? The supply side sounds like, well, the challenging part.
Yeah, challenging is putting it mildly. This is the other side of the coin, and it's where things get really constrained. As we mentioned, the market's already in deficit, and it looks like it's going to stay that way. Supply just isn't keeping pace.
Why not? Can't miners just dig up more silver if the price goes up?
It's not that simple, unfortunately. Let's look at mine production. Global output was around 830 million ounces in 2023, actually down slightly. The bigger trend has been stagnation. And key reason is falling ore grades, the amount of silver in the rock they mine. It's dropped by about 55% on average since 2005.
55%, that's huge.
It is, and they aren't finding massive new, rich silver deposits to replace the aging ones. But here's the really crucial part. The thing that makes silver supply so tricky, over 70% of it is mined as a byproduct.
Meaning they're actually mining for something else, like copper or gold.
Exactly. Lead, zinc, copper, gold. Silver just comes along for the ride.
So the decision to mine more isn't based on the silver price alone.
Precisely. Depends on the economics of the main metal, the lead, the zinc, whatever. Even if silver prices shoot up, a copper mine isn't going to ramp up production unless copper prices also make sense. Silver supply is kind of at the mercy of other metal markets.
That complicates things massively.
It really does. So the forecast for mine supply up to 2030. It's expected to actually peak around the mid-2020s, and then maybe even decline slightly to around 900 million ounces by 2030.
Like decline, even with high demand.
Potentially, yeah. We're looking at aging mines, rising costs, difficulties getting permits, resource nationalism is a factor too, plus shortages of skilled labor. It's tough out there, and geopolitical risk is baked in. Mexico and Peru together account for something like 40% of global mine supply.
Concentrated.
Very. And we saw what can happen, like the big strike at the Penasquito mine in Mexico in 2023. That shut down a major source for months. Political instability, changes in mining laws, these can all hit supply unexpectedly.
So mining isn't likely to fill the gap. What about recycling?
Recycling secondary supply is the other piece. That's getting silver back from old jewelry, electronics, industrial scrap. It was around 180 million ounces in 2023. Now, we do expect recycling to increase. Our forecast puts it around 250 million ounces a year by 2030.
What's driving that increase?
A few things. Higher prices obviously encourage more recycling. There were big slugs of investment silver bought in 2020, 2022. Some of that might come back. Plus, better technology for recycling e-waste, catalysts, and this general push for a circular economy.
Okay, so recycling helps, but 250 million ounces. That doesn't sound like enough to cover those big deficits we might see.
Exactly. It helps, but it has limits. A lot of silver used in electronics is in tiny amounts, very hard to recover economically. And inventories aren't infinite. Look at the COMEX vaults, the big exchange warehouses. A few years back, they held maybe 150 million ounces of registered silver. By early 2024, it was under 50 million.
Wow, drained significantly.
Yeah, those deficits are drawing down readily available stocks. So recycling helps buffer things, but it's unlikely to fully bridge a really large gap between primary supply and booming demand.
And you mentioned ESG factors too, environmental, social, governance.
Right. Stricter environmental rules, social pressures, community relations. These can add costs and delays to new mining projects, further constraining primary supply.
So adding it all up, base case supply by 2030 is maybe 900 million from mines, 250 million from recycling. That's 1.15 billion ounces.
Roughly, yeah. In that ballpark for the base case.
And you said demand could be 1.3 to 1.5 billion.
Correct. So you compare those numbers. Most likely scenarios show this continued market deficit right through to 2030. The imbalance looks structural.
Okay. Structural deficit. That sounds like it should mean higher prices.
Right.
But it's not just about physical supply and demand. You mentioned the macro factors.
Absolutely, especially for silver because of its investment appeal. These bigger economic currents really shape investor appetite and therefore the price.
So let's get to the big question then. What does all this mean for silver's price tag in 2030?
Right. The macro overlay is key. First, inflation, and crucially, inflation expectations. Silver, much like gold, has that history as an inflation hedge. Think back to the 1970s stagflation or even the rally after the COVID stimulus. Silver did well.
So if inflation stays higher than, say, the 2–3% central banks want,
If we see persistently higher inflation, say 4–5% or more, or especially if we get stagflation that's high inflation with slow growth, that would likely be very bullish for silver investment demand. Our base case assumes inflation moderates, though.
okay. What about interest rates?
Interest rates and monetary policy. Hugely important. There's generally an inverse relationship here.
Meaning higher rates are bad for silver.
Usually, yes.
Right.
Especially real interest rates, that's the nominal interest rate minus inflation.
Why is that?
Opportunity cost. Silver doesn't pay interest or dividends. So when real interest rates on safe assets like government bonds are high, it becomes more costly, in a sense, to hold silver instead. You're giving up that yield. Statistically, the correlation is pretty strong. Silver prices tend to move opposite to 10-year real yields. High real yields hurt silver.
And the base case assumption on rates.
Moderate rates, maybe some gradual easing by central banks by 2030. If we saw very low or negative real yields again, like we did for periods in the last decade, that would be extremely supportive for silver.
Got it. Then there's the dollar.
Yep. The US dollar. Silver is priced in dollars globally. So when the dollar strengthens, it gets more expensive for buyers using other currencies that can dampen demand.
And a weaker dollar helps silver.
Generally, yes. Our base case assumes the dollar might weaken gradually by 2030, maybe due to Fed easing or concerns about U.S. debt levels. A weaker dollar would be a tailwind for silver prices.
Okay, inflation, rates, the dollar, anything else?
The gold price itself, and importantly, the gold-to-silver ratio, the GSR.
How many ounces of silver to buy 1 ounce of gold?
Exactly. Silver often takes its cues from gold, but it can outperform or underperform. And what's really striking right now, and has been for a while, is that the GSR is historically very high.
High meaning silver is cheap relative to gold.
Correct. The ratio has been bumping around 80-1, even close to 100-1 at times. The long-term average is more like 60 or 70-1.
So a lot of analysts look at that and think,
that silver is undervalued compared to gold. And if silver's industrial demand story really plays out and the market tightens fundamentally, you'd expect that ratio to fall, meaning silver could outperform gold significantly.
Okay, fascinating. So you've got the physical deficit potentially pushing prices up, and then these macro factors that could either supercharge it or hold it back. Now, let's bring it all together. You mentioned a model that combines all this to project the price in 2030.
Yeah, we used a modeling approach, multi-factor regression, scenario analysis, trying to balance the core supply-demand fundamentals with plausible macroeconomic outcomes. And remember, those deficits we've already had, 2021, 22, 23, 24, totaling nearly 700 million ounces drawn from inventories. That's already built a strong foundation for prices. If deficits continue, logically, prices should keep feeling upward pressure.
So, drum roll. What's the base case forecast for 2030?
Okay, so the base case assumes, deficits continue, but maybe stabilize around 150, 200 million ounces a year. Industrial demand grows steadily. Macro conditions are moderate, real rates around 1%, inflation maybe 2-3%, dollar a bit weaker, gold around $2,200 perhaps. Under those conditions, the model points to a silver price around $45 per ounce in 2030.
$45.
Yeah, with a likely range, a confidence interval of, say, $32 to $58. A price around $45 probably helps balance the market, maybe trim some jewelry demand, encourages more recycling. It's basically getting back towards the higher end of where silver traded in the past decade or so, but reflecting the tighter fundamentals.
Okay, $45 base case. What about the upside? The bullish scenario?
Right, the bullish case. This is where green tech demand really explodes. Total demand pushes towards 1.5 billion ounces. At the same time, supply struggles, maybe mine output stays flat or even drops, recycling doesn't pick up as much. This could lead to huge annual deficits, maybe 400 million ounces or more.
Oh, yeah, that would drain inventories fast.
Critically fast.
Yeah.
And you'd need favorable macro wins, too. Maybe some mild stagflation or central banks cutting rates aggressively, pushing real yields to zero or even negative. A much weaker dollar, maybe gold pushing towards $3,000 or higher. In that kind of scenario where you have a fundamental squeeze and strong investor buying, the model suggests silver could reach $85 per ounce by 2030.
85.
Yeah, maybe with a range stretching from $70 up towards $120 in the extreme. That kind of price would definitely choke off some demand and incentivize a lot more recycling, but it reflects that severe tightness. And you'd likely see the gold to silver ratio plummet, maybe towards 40 to 1.
Okay, that's a very different world.
Yeah.
What about the downside? The bearish scenario?
The bearish case is basically the opposite. Maybe the green transition stalls or technology finds ways to thrift silver much faster than expected, so demand growth disappoints, staying closer to 1.1 billion ounces.
Yeah.
And maybe supply surprises to the upside. New mines come online faster, recycling ramps up more. You could end up with small surpluses, maybe 50, 150 million ounces a year.
And the macro picture?
Unfavorable. Low inflation, maybe even deflation fears. Central banks hiking rates, pushing real yields up to 2% or more. A strong dollar. Gold price stagnant or falling. Investor interest just dries up. In that world, the model suggests silver could fall back towards $20 per ounce by 2030.
$20.
Yeah, maybe a range of $15 to $25. That's close to the cost of production for many miners. It's a scenario where the structural bull story just doesn't pan out and silver kind of languishes. The GSR would probably shoot back up towards 100 to 1 or higher.
So quite a range of possibilities. $20 on the low end, $45 base, $85 on the high end. Very dependent on those demand, supply, and macro factors lining up.
Absolutely. And just to give a feel for sensitivity, every extra 50 million ounces of industrial demand per year, that might add something like $5 to $10 to the price, roughly. A 1% change in real interest rates, that could swing the price by maybe 20%, potentially $10 or more per ounce.
Huge leverage from rates.
Massive.
Yeah.
And say a 10% weaker US dollar, that could translate to maybe a 10-20% higher silver price. It just shows how interconnected it all is.
Okay, incredibly insightful. So, wrapping this up, what does this all mean for you, the listener, whether you're investing, using silver in industry, or just trying to stay informed?
Well, for investors, I think the key takeaway is the potential opportunity in a market that looks structurally tight, but also be very aware of the volatility. Those macro factors can swing things wildly. For industrial users, especially in solar, EVs, high-tech electronics, the message is clear. Silver is critical and likely to get more expensive. So strategies like thrifting, finding substitutes where feasible, and definitely securing long-term supply become really important.
Strategic sourcing.
Exactly. And for policymakers, it's about recognizing silver's role as a critical enabler for green energy goals, for digitalization, even national security in some tech areas. Scarcity could become a real issue.
So the final outlook summary.
I'd say the silver market looks set to become significantly larger and more important strategically. Industrial demand is locking it in as essential for the green and digital economy. We see these persistent deficits as the most likely path forward. 2024 was the fifth deficit year in a row. That trend seems baked in, and that fundamentally supports higher prices. How high depends heavily on those macro factors, but the evidence points towards silver shifting gears, maybe undervalued in the 2010s, potentially a real standout performer in the 2020s as the world electrifies and decarbonizes. You could argue higher prices aren't just possible, they might actually be necessary to balance this market in the long run.
A necessary ingredient for the future we're building. So the next time you see a solar panel gleaming or hear about millions more EVs hitting the road, you'll know there's this quiet silvery engine humming underneath it all. And maybe a final thought for you to consider. Given silver's dual identity industrial workhorse and precious metal, and its critical role in where the world is heading, this deep dive really shows its fate is tied not just to markets, but to the pace of innovation, our commitment to climate goals. It's all connected. What other critical materials might reveal unexpected connections if you looked at them through a similar lens? Something to think about. Keep exploring, keep questioning. Thanks for joining us on the deep dive.